Good morning from London. I'm Anna Edwards alongside Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. Stocks in Asia follow Wall Street lower on renewed concerns over tech valuations. But a rosy sales forecast from Micron is helping Nasdaq futures back into the green. The Bank of England is set to resume rate cuts, with the ECB expected to hold. We will set you up for Decision Day. Plus, President Trump keeps the focus on affordability as he speaks to the nation. Traders look for the US November CPI print later today.
Well, Anna, the market picture looks like this. We already had a rough session on Wall Street yesterday because of the AI valuation jitters. Then we had a choppy session in Asia, as you've said, in the red, and Euro Stoxx 50 futures in just the past few seconds have turned green. Wall Street futures pointing to a higher open there. We had reassurance from Micron overnight, and we got to talk about oil again. It's up for a second day. The geopolitical concerns around Venezuela and around Russia outweighing the oversupply concerns for now. The countdown to the opening trade starts right now.
Welcome to the program, everybody. This is the opening trade. It is Thursday morning, Thursday the 18th of December. Lizzy, let's start the program with a conversation about tech, because this, in terms of the global conversation in equity markets over the past 24 hours, the weakness in US stocks, this has been the focus. So yesterday in the States was about weakness, and it was around AI concerns, valuation concerns, a focus on Oracle and what they were or were not doing with Blue Owl. But then move into the after hours session, and the focus is on Micron, which is a much more positive story. So let's dive into Micron, because that takes us into US futures, which are pointing higher, certainly Nasdaq ones at least. So Micron pretty upbeat with its estimate for what it's going to deliver in this quarter, and specifically on AI pretty positive, because this is a business that makes those high bandwidth memory chips so important to the AI rollout, and they're saying that they're already sold out for 2026. The stock up 8% after hours, and crucially investors went into this nervous. They went into this nervous about the messaging around AI.
Yes, because as we go back to the Blue Owl Oracle story, a decoupling and Oracle shares dropping off the back of it. This is about Oracle's data center project in Michigan, and Blackstone and Bank of America notably are still financing the project, but it shows how even the slightest bit of trouble around data centers can spook investors. So Blue Owl basically assessing that the terms weren't as good as other deals that they can get elsewhere. There were concerns about potential delays because of politics in the state. I just wonder whether this sort of financing concern is the sort of bump in the road that we start to see more and more often when we're concerned about the AI bubble. Absolutely.
It is amazing how just the slightest stumble in the narrative around AI can lead stocks into a bit of a tailspin. I mean, let's not overdo it. Some of the Oracle itself wasn't actually down that much at all in session yesterday, but we did see some weakness around some of the tech names. So that takes us on to our next conversation of the morning, which is around central banks and where interest rates are going to be, because if you're doing a whole lot of infrastructure build out, you don't want to pay too much to borrow the money. So what are we going to be looking out for when it comes to, well, let's start with the BOE, shall we?
Let's start here in London. Well, this is going to be the BOE's first cut since August. It's more than 90% priced in by traders. It was expected to be a 5-4 vote split again, and it was expected to come down to the vote of the governor again, but this time in favour of a cut. But after that CPI print yesterday, weaker than expected, it could be a more dovish vote split than the last time. Now, of course, we're going to be looking at the guidance to see if there are more dovish hints on the path ahead there. It'll be interesting to see how they assess the budget that's happened since the last meeting. But I really want to see just how dovish the messaging is from the BOE. But of course, we also get the ECB.
We do. And just on the Bank of England, I mean, the narrative around the strengths and weaknesses of the economy is really interesting, almost like a bit of a pivot point at the end of the year. Because, yes, if you look back, the GDP numbers have been bad, monthly numbers certainly. But then the PMI data are actually kind of positive, and people asking questions about whether there is something of a turning point.
Yeah, we don't get a press conference today, but they could signal that they see a weaker fourth quarter than they had previously because of that GDP data that we saw on Friday, that contraction, which again comes down to the budget partly, because of all of that speculation weighing on the economy.
And if it's weaker but not too weak, that might mean more rate cuts, which might be taken as a positive, as we know. Markets do what markets do. ECB then, no change expected. We do get new forecasts there, but Christine Lagarde, will she be just trying to not pre-commit in any direction?
Yes, well, she's got a difficult job, and the euro's vulnerable here because the expectation is that that forecast is going to show inflation undershooting the 2% target in the years ahead more persistently. But then, of course, the press conference is going to raise those comments from Isabel Schnabel and the market repricing off the back of those comments. Jens Eisenschmidt at Morgan Stanley has said that those market shifts equate to a 25 basis point hike. So even if Lagarde doesn't want to comment on that, the market's going to latch onto it.
Yes, it does seem to be shaping the thinking just a little bit. I mean, the majority seem to think there's a majority of economists, no change in rates for 2026 or 2027 from the ECB.
Yeah.
But the majority of those who expect any kind of change is now for a hike. So it seems as if the market is listening to Schnabel a little bit. Whilst we're talking about inflation, let's go stateside, shall we, Lizzy, because we are expecting CPI out from the United States. Headline estimate 3.1%.
Yeah, we only get a partial report for October, so the focus more on November here. It could be the report that creates the confidence the peak in inflation is coming and soon. Of course, Powell said last week that he expects goods inflation to peak in Q1 of 2026. We also heard from Chris Waller, the Fed governor, who, of course, had his interview with President Trump to be the new Fed chair. He was talking about how the rate cuts there should be more of them, but he's not in a rush for them because inflation's still up. And interestingly, we also heard from the president in his primetime address last night talking about the economy. Bit of a mixed, muddled, perhaps, message.
Right. Well, he was talking about affordability, putting that front and centre, cost of living, whatever you want to call it, and the impact of that spike up in inflation from a few years ago, what that is doing to the psychology around the economy and people's perception of affordability, I find really interesting. So President Trump talking about, wages are higher than inflation and hailing this as a big triumph. Well, that's true, they are, and this chart shows that, but it also shows that that's been the case since the middle of 2023. But it is interesting how that experience of really high inflation lingers with consumers, doesn't it? And even if inflation is not running really hot, the higher price levels can feel as if people are still feeling more inflation than they actually are. What worries, I think, some critics of the current US administration and what we saw in that white line at the far right-hand side of that chart, which is that little uptick in CPI. And is that to do with tariffs? He was arguing last night that because of tariffs, he's able to offset the affordability crisis for those in the military by giving them a Christmas bonus. But anyway, that's inflation will continue to influence politics, and politics will continue to do whatever it wants with the inflation narrative.
Yeah, look, it's psychological, and it brings us back to the Bank of England, because, yes, the Chancellor has done all of this stuff to bring down the cost of living, but the question is, does the Bank of England look through that as a one-time thing, or do inflation expectations remain high? It's in the minds of the consumers.
So we have lots of central banking to talk about. We also have some politics.
Yeah, at 10 a.m. London time, we're going to get that EU Leaders Summit. Then at 12 p.m, the BOE rate decision, as we've been discussing, followed by the 1:15 p.m. ECB rate decision out of Frankfurt. At 1:30 p.m. it's US CPI, and then at 1:45 p.m. the ECB press conference. I'm sure currencies will be tugged in all sorts of directions with that raft of central bank decisions and data today. Now, EU leaders are gathering in Brussels, as we say, for those Ukraine talks. Our chief Europe correspondent, Oliver Crook, is on the ground for us. Ollie, just remind us why this meeting's so important to Ukraine's future. Good morning.
I think it's fair to say that this is really a do-or-die meeting for the Europeans on two main issues. The first is on funding Ukraine, getting the Ukrainians on financial footing for the next few years to be able to support their war effort to defend against the Russians. And the second on this Latin American trade deal, the Mercosur trade deal, that's been 25 years in the making. These two issues, which are massive issues for the Europeans, you really can't undersell how big of a deal this is in trying to get these over the line. These two things have come into doubt over the last couple of weeks. And going into this meeting, as they file in over the next couple of minutes, minutes, we have no idea which way they're going to go on both of these issues. On the question of Ukraine and the Russian asset funding, we still don't know if they're going to be able to overcome the sort of Belgian resistance that there has been to this. We've been hearing from a number of different European leaders who have a lot of different opinions about whether or not they're going to be able to get this over the line. And the second issue on this trade deal with Mercosur, this is something that has been in the works for 25 years. It was supposed to be signed this Saturday by Ursula von der Leyen in Brazil. And now, as of last week, we basically came into question here whether the French would object to it, whether the Italians would. And we should say that today, in addition to all the European leaders being here in Brussels, so too are many European farmers with tractors on the roads to protest the Mercosur trade deal. I think for the Europeans, this is a main issue about credibility, whether or not they're going to be able to take control of their destiny, be able to move on the Russian assets, being able to move on this free trade deal with the Latin Americans. Is this a continent that is about supporting their allies, making tough decisions to do it, and about free trade? That is the question before the Europeans today, and whether or not they can get it over the line or if internal squabbling will lead in extended paralysis.
Some pretty fundamental questions then in focus today. Ollie, thank you very much. Bloomberg's Chief Europe Correspondent, Oliver Crook. Let's tell you what we've got coming up on the show today. Sylvia Ardagna joins us from Barclays, Head of European Economics Research. Perfect voice then to set us up for those big central bank decisions today. Then an exclusive conversation. We just heard from Oliver. He'll be speaking to Kaja Kallas, Head Representative of the EU for Foreign Affairs and Security Policy, talking Ukraine, talking trade. And that'll be a conversation certainly to tune in for. Wager will be with us, UBS Chief Strategist. How concerned is he that we keep wobbling around the AI theme, or is he pretty convinced that that dominates into 2026? And Fabrice Potier, Rasmussen Global CEO, will be with us to talk geopolitics as we wait for that EU leaders meeting to really kick into gear.
Here's what else you need to know this morning. Bloomberg understands that the White House is set to announce drug pricing deals with pharmaceutical heavyweights Novartis and Roche as soon as Friday, easing trade tensions with Switzerland. Pfizer, AstraZeneca and other companies have already struck deals with the Trump administration in recent months, agreeing to lower prices in certain instances in return for tariff relief from tariffs. We're told other drug makers could also be included in tomorrow's announcement. Elsewhere, Rheinmetall has boosted its outlook for the year and announced plans to sell its remaining civil businesses. The moves highlight how surging demand for defence in Europe is pulling the company deeper into its core military markets. And BP has hired the Chief Executive of Australia's Woodside Energy to be its new CEO. The management shake-up comes as the company struggles to revive its fortunes after a botched pivot toward renewable energy. Meg O'Neill will become Big Oil's first female leader. She'd previously spent 2 decades at ExxonMobil before spending 4 years at the helm of Woodside. She's set to start with BP in April. So, Anna, notable on 2 fronts that she's the first big oil female CEO and that, as BI, Bloomberg Intelligence puts it, this is a full-throated return to oil and gas as BP's strategy centrepiece. Yeah, absolutely. And they're drawing on her experience at Woodside to make that kind of comment. So suggesting this is back to the basics for an oil and gas business. And also suggesting that what is now the outgoing CEO, Murray Auchincloss, was perhaps finding it difficult to draw a line between the previous Bernard Looney management of the company, which had overseen that big pivot, and the role that he had played in that as one of the very senior team under Bernard Looney, finding it difficult maybe to draw a line in the sand between that era and this new era, and of course under pressure from Elliott as a activist shareholder. So now the baton will be passed to Meg O'Neill. Coming up on the programme then, we will focus on some of the earnings stories still to come. Nike releases its latest earnings today, with the retailer also looking to update investors on its Win Now strategy. Plus, Nasdaq futures are in the green after yesterday's US tech rout. That has a lot to do with Micron. We'll get some details on what's happening there. We'll see if that optimism feeds into the European market open. Up next, it is Decision Day in London and in Frankfurt. We will talk central banks and rates, of course. If you have questions, if you want to get involved in these conversations, IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
Here at home, we're bringing our economy back from the brink of ruin. The last administration and their allies in Congress looted our treasury for trillions of dollars, driving up prices and everything at levels never seen before. I am bringing those high prices down and bringing them down very fast.
Prime-time address from the President at the White House yesterday, and we're going to get a more concrete sense of prices with today's US CPI read for November. Let's bring in Bloomberg's Valerie Teitel for more. Val, what are you expecting?
Look, a CPI report going to keep traders tied to their desks later this afternoon. The report is dropping right in between the ECB decision and their press conference, so no Christmas shopping in between 1 and 2 p.m. for all their viewers out there. We are expecting to see perhaps the beginning evidence that tariff pass-through might be behind us. Bloomberg Economics, our own Anna Wong, is going to be watching for those components that have shown some signs of tariff pass-through already. She thinks those are begin to roll over, and that kind of confidence for the market to maybe price in the fact that goods inflation could be peaking could be good news for the equity market, because gosh, it does need it this month of December. Yesterday's session, that big wobble in tech saw the S&P 500 close below its 50-day moving average. We are on a back foot for the month in December when it comes to momentum in the equity market. There is also a good chance, though, Anna and Lizzy, that today's print could be just as noisy as the jobs report earlier today, and the market might not know what to think of it. Thankfully, we did have Governor Chris Waller weigh in on what he thought about the noisy jobs report of a few days ago. He was speaking at a presentation at Yale to CNBC, saying that the labor market is very soft. We're close to zero jobs growth, and that's not a healthy labor market. However, he did follow up these comments with some rosy things on the labor market for 2026. He thinks that the labor market could rebound next year. That's on the back of the preemptive rate cuts the Fed has already done. Tariff uncertainty abating for businesses, fiscal spending, and the real prospect that we could get a seriously measurable boost to productivity gains. So not all dire words from Governor Chris Waller. He does think that the Fed should continue to cut rates, but not at an urgent pace. And obviously, we're more focused on what Waller says now that we know he's still being interviewed for the Fed chair position.
Valerie, thank you very much. Bloomberg's Valerie Teitel with the latest on the Fed conversation, looking ahead to CPI. We will return to that theme and the US economy shortly, but let's linger on some of the central bank decisions that are coming here in Europe. Sylvia Ardagna joins us, head of European Economics Research at Barclays. Sylvia, nice to have you with us. Thank you for coming in. So let's start our conversation on these European central banks then that are deciding today. And the Bank of England in focus because it is expected to move, but the vote expected to be tight, although I wonder just how tight. I think yesterday, 2 days ago, we were talking about, well, it's probably going to be 5-4, maybe Bailey moves to the side of a cut, but could it not be 5, could it be 6 in favour of a cut? I mean, given the inflation print yesterday, it was above target, but falling faster than expected.
Good morning, and thank you for having me here. Yes, we had a string of weak data, so that can move the MPC more toward the dovish side. We had GDP disappointing on Friday. We had weak labor market data, and inflation yesterday was a pretty large downward surprise. But we still expect the split to be 5-4. As you said, I think what is important is also the language and what is forward. I think market will be looking for any hints of a further rate cut. We still have one in March, but overall we think it's the MPC remains split, and even if inflation fell, service inflation is still quite high, as it's the long-term inflation expectation. So maybe we are not there yet to have a full-blown shift in the dovish side.
Okay, not a full-blown shift to the dovish side. And so what does that mean for expectations for 2026 in terms of how many cuts we get from the BOE?
We have one with coming in March at 3.5%. I think that will leave the terminal rate, close to estimates of the neutral rate. And now the bank has basically been more open to 0.2. And then I think the central banks want to remain data dependent and keep the optionalities on all sides. So if more needs to come, I don't think it's the time yet for that to be priced in or signaled.
Okay, so I take it you don't think they're going to change the language of the guidance this meeting. I wonder what you think about the budget and how they'll assess that, because, of course, the Chancellor made all of these efforts to reduce the cost of living, cutting train fares, for example. Do you think they'll just look past that as a one-time thing, or do you think they'll see the budget as disinflationary on a longer-term basis?
I think we already heard from the Deputy Governor Lombardelli that they assessed the budget as being disinflationary, or more or less about 50 basis points of disinflation. But again, the rub stamping of that will come with the new forecast when they will be updated at the February meeting. So definitely the budget has been a good news, but I don't think it's the time yet to basically crystallize this event in a change in the language.
OK, let's pivot to the ECB then, because that decision also coming today. President Lagarde's got a pretty difficult job communications-wise on her hands. I know she does often, but do you think that she is going to push back against the market shift after Schnabel's comments?
We agree that it's going to be a very challenging meeting in terms of communication. We don't think that she will explicitly push back, but most of the time she basically says that she doesn't comment on market pricing and that the ECB remains data dependent and takes decisions meeting by meeting. So we don't expect her to take any commitment on the future. But definitely we think the tone is going to try to be on the neutral side, because the market has already repriced more on the hawkish side. The forecast will see an upward revisions of growth and perhaps slightly on inflation. So that is going to be a challenging meeting in terms of communication.
But do you think that sort of silence would be a real dovish surprise for the market? I mean, when they've moved so much off the back of the Schnabel comments, surely that leaves the euro very vulnerable.
Definitely. I don't think, again, it's challenging in our view, because if you sound too optimistic about the economy, you might give another hawkish impulse to the market. So we think the neutral tone should try to a little bit undo that, or at least not make it worse. I mean, in our inflation forecast, and we think also the ECB inflation forecast, will still show an undershooting of inflation from target. And even if growth will be revised higher, we need to keep in mind that the high growth is also predicated on a decline in the saving rate that is quite large. And we haven't seen that yet happening in the euro area.
Sylvia, if you look at the thinking around, if there is another move, will it be a hike? That has evolved, hasn't it, around the Schnabel comments. But if you look at what the majority of economists are saying, they are still saying that the ECB is on hold for a very long time. Could we really be on hold for 2 years at the ECB?
Well, we have it to be on hold for 2 years. So
okay.
The answer is yes.
So yes.
But I would say that our own risk balance is different. We actually have not changed since the executive board member Schnabel's speech. We actually think that the risk is more to the downside, so more for a cut than for a hike. And again, that's based on the inflation forecast that we have and that we think the ECB will put forward.
Sounds like Lizzy won't be going to Frankfurt for ages. She'll be stuck outside Threadneedle.
I don't know why they couldn't just look at their diaries, because the BOE and the ECB are on the same day all the way to June next year.
Oh, my goodness. Right. Scheduling nightmare. What about the import story in Europe then, Sylvia? Because there's a lot of focus on the fact that China is still exporting a lot. It's just not all going to the United States. It's going to other places in Asia and also perhaps coming to Europe. President Macron, we've heard him talking about this, or at least how to treat Chinese imports and maybe tariffs, that sort of thing. The conversation carries on. But what kind of downside risk to inflation is there from that, do you think?
For the moment, we don't see a big downside risk. We have done some work, and perhaps you could assess it in the order of 10-15 basis points. But we still think that's an important risk, and we think that the Governing Council has it on the back of its mind. So that, together with the exchange rate appreciations, are further downside risk to inflation. We also have seen in the latest print yesterday that the underlying momentum, both in core services, has gone down. The majority of the underlying indicators of the ECB have been more on the soft side. So again, these, I would say, points more to downside risks than to upside risks to inflation.
Lest we forget, we also have a Riksbank decision today. Do you think they're in the sweet spot? Nothing to see there?
I mean, I think that the market has...
that's the expectation, isn't it? That's the consensus expectation.
The consensus expectations, and so we have nothing different there.
All right, so a hold expected from the Riksbank at 1.75%. We'll bring you that decision when it comes later in the programme. But for now, Sylvia, so good to see you. Sylvia Ardagna, Head of European Economics Research over at Barclays. Coming up on the programme, BP's appointed Meg O'Neill as its new Chief Executive Officer. making her big oil's first female leader. That story part of your stocks to watch coming up next as we look at US futures pointing higher and pretty flat here in Europe. Euro Stoxx 50 futures only up 5 basis points, same for FTSE futures. More next. This is Bloomberg.
Welcome back to the programme, everybody. This is the opening trade. We have 30 minutes until the start of cash equities trading. The futures picture then for European equity markets looks like this. A great big unchanged for the Euro Stoxx 50 futures. Something tells me we're waiting for something today. We're waiting for lots of decision-making and some data stateside. We'll see which of those has more of an impact. But, of course, the Bank of England, the ECB and US CPI then. Lizzy, all in focus.
Yeah, of course, we're waiting for a cut from the Bank of England and a hold from the ECB. Let's take a look at where your bond space is at right now. The German 10-year is currently at 2.84%, lower 2 basis points, and it's similar moves across the rest of the continent at that part of the curve. The French 10-year at 3.55 right now. So not a lot of movement, but we're waiting for Frankfurt.
We are waiting, and things have turned a little more positive, haven't they, in Europe, as we're seeing US futures tick a little higher on the back of some tech news, in particular around Micron. But let's talk about the wider markets then. Skylar Montgomery-Koning joins us from our Markets Live team to discuss the market context. Skylar, good morning to you. The market context today is dominated by two big central banks here in Europe, of course the Riksbank as well. So as we look ahead to those, is there anything that unites them, or should we tackle them separately?
I think separately is definitely
Let's
the
go
answer.
separate.
Also, don't forget there's the Novartis Bank as well.
Yes.
So there's 4 big European ones that we're looking at. I think, Bank of England is the one you're likely to see the biggest surprise. There's been a lot of dovish pricing. You had inflation come in significantly lower yesterday. You also had data since the last meeting have all kind of skewed in that direction. So markets are very firmly priced for a cut at this meeting and looking for more dovish signals further out. Now, I think if anything that's likely to be disappointed, you have a board that's still pretty divided. So that means the signal will come from the vote split more than anything else, and maybe get the pound rally on that. I think particularly with the pound, you maybe need a little bit lower of a risk premium price in there now that we've had inflation peaking. It's also a positioning thing in that you had very stretched short net positioning at the end of November. Some of that likely unwound post the budget, but you still probably have a ways to go. And if you get that kind of cut excitement disappointed today, you could certainly see it move.
So you've been warning that the euro is vulnerable as well when we look at the ECB. If at the Bank of England you have, for example, Claire Lombardelli and Catherine Mann joining the doves this time, what happens to pound euro? What if they're both dovish?
Yes, then you could probably see some pound weakness, but I think the euro will likely exceed that weakness. And the idea is that the ECB, they want a very boring meeting, right? I think at the last meeting, the headline that I wrote on the back of it was market rightfully ignores ECB. Now, you might have a bit of a change in how the market interprets that because we do have economic projections. So they'll kind of want to see what those economic projections tell you about whether you'll get hikes in 2026. I don't think the projections will change materially from September. What has changed materially since September is the pricing in the market. So you've gone from expecting 15 basis points of easing to looking for the next hiking cycle. And for a central bank to hike, you either need to have policy that's too easy or you need to have a risk of inflation reaccelerating. Right now, the policy rate is within the neutral range, and the inflation forecast is likely to have headline below target through 2027. So I think, if anything, that's going to be disappointed, and that means that the euro can sell off, and it means that maybe you can start thinking back to, we're not going to get hikes from the ECB next year.
So if the ECB as a whole doesn't sound as hawkish as Isabel Schnabel, then maybe the market has a bit of a rethink. We spoke moments ago, though, to our guest who was saying that the ECB could be on hold for 2 years, Skylar, and that seems to be the majority view, actually, from economists, that we'd stay on hold for a very long time. That's a lot of conversations about whether the next move is a hike or a cut. We could be caught in that place for a long time.
Yes, absolutely. And I think it's interesting why the market started looking for hikes, right? It was one comment from ECB Schnabel, and the governing board generally hasn't shifted hawkishly, I think. And like the Fed, it's a board, right? So it's not just one person that decides. And then the other factor was you had hotter data in Australia and Canada that meant the market was looking for hikes there. And I certainly don't think there's a read-through from those economies that aren't related in a huge way to Europe to whether or not you should see higher growth in Europe.
I mean, I wonder what she has to say to cancel out Schnabel. Put the forecast to the side for a sec. If Lagarde comes out and says it's data-dependent, meeting by meeting, no particular commitment to a certain rate path, is that enough to undo the market repricing?
Yeah, I mean, we've come actually a little bit back from your more hawkish expectations. So I think if you just have a kind of flat forecast profile, the market maybe just has more of a neutral outlook for 2026. But I think the issue is you get very anxious within markets, and that when the cutting cycle ends, you're going to start looking for the hiking cycle. So unless there's a signal that, you know, maybe the economy isn't as strong next year or inflation is to the downside, which is what I think you're more likely to get, you're going to keep looking for the hiking cycle because you want to know what the next policy move is. It's not very exciting to price in nothing for 2 years.
Chomping at the bit for what's coming next, even if it is 2 years away. Skylar, thank you so much. Bloomberg's Skylar Montgomery coding with our M-Live look ahead. But now let's get to our stocks to watch with Chloe Melly. Chloe.
Good morning, Lizzy. BP has appointed the very first female CEO of a big oil company. Meg O'Neill is joining from Woodside, and she's got a big task ahead of her. So she needs to revive the fortunes of a company that has been struggling, lagging behind rivals. And she needs to also deliver on that strategic shift away from renewables and back towards oil and gas. But it seems that the market is planning to receive this news, this appointment, quite well, with Piper Sandler analysts saying that there was really a growing investor appetite for a more aggressive approach, and that O'Neill's track record of strong execution and aggressive moves at Woodside will serve her well in that regard. So we'll keep an eye on BP this morning on the back of that CEO appointment. Moving on to Novartis and Roche, and those two Swiss pharmaceutical companies are said to be really close to reaching a drug pricing deal with the US. So we could see a boost in those shares. Today they've been, as we can see, having a pretty good run, but they've been underperforming slightly AstraZeneca, which was one of the big European pharmaceutical companies to reach a drug pricing deal with the US. So there's still some room to catch up with AstraZeneca in that way. This is a deal where we don't have the details yet, but we'll be keeping an eye on that moving forward. And finally, Rheinmetall is planning to divest its remaining civil assets to refocus fully on defense, and it's also boosted its outlook. Rheinmetall, of course, has been really the poster child for that defense trade with that massive rally, but that slight pullback recently. So we'll see how much this announcement really drives those shares today and reassures investors that there's a little bit more room to grow for Rheinmetall.
Chloe, thank you. Our equities reporter, Chloe Melly, with a look at some of the stocks that we'll watch this morning. Coming up on the programme, though, we still have to find space for plenty of geopolitics, and as it's been such a mover of markets of late, EU leaders prepare to discuss a loan to Ukraine backed, perhaps, by frozen Russian assets. The European Commission Vice President Kaja Kallas joins us exclusively next. This is Bloomberg.
It is about making clear to Russia that continuing this war of aggression is senseless. Making these assets usable would finance the Ukrainian army for at least 2 more years, according to our assessment. And let me say this very clearly. We don't want to take this step to prolong the war. We want to take it to end the war as quickly as possible, ladies and gentlemen.
As the German Chancellor, of course, Friedrich Merz, speaking there ahead of a really important EU leaders meeting that is taking place, due to start today. And, of course, one of the crucial lines there will be Ukraine, how Europe steps forward with more funding for Ukraine. Do they use frozen Russian assets? The interest of those, of course, has been employed already, but do they use the actual principle? And views have varied within Europe. To what extent do they still vary is going to be the subject of today. We've heard from the Belgian Prime Minister, who's been speaking this morning, saying saying that the Belgian position has not changed. Using Russian assets may weaken the euro on world markets. Sharing of risk is a precondition for Russian asset use, and saying that the EU text, that this is De Wever, the Prime Minister over in Belgium, saying that the EU text that he has seen so far does not address the concerns sufficiently. So still some work to be done behind closed doors, perhaps then, Lizzy, by these European leaders to try and bring Belgium on board. But it's not only Belgium that's been standing out here. Italy a little more resistant. Anyway, we're getting those lines this morning from Belgium as we go into this meeting. We're also hearing from von der Leyen, who's saying support for Belgium is there to have concerns accommodated. So we'll see what they can deliver.
Yeah, it was interesting to hear from Giorgia Meloni reversing her position, really, when it comes to those frozen Russian assets. Saying that, our source is saying that Italy would prefer joint borrowing. That could reflect the US pressure on Italy. But we also are hearing from Ursula von der Leyen speaking at the moment. She's saying that they support Belgium to have their concerns accommodated. As you say, Belgium wants other countries to share the risk if Russia puts a claim on these assets. But Belgium worried about the legal difficulties around those assets.
Yes, and she's going on to say, we've got live pictures coming to us, Ursula von der Leyen arriving for this meeting then, taking place in Brussels today, saying the risk of reparations around the reparations loan must be shared by all. And that goes to the heart of what Belgium has been saying, that they want these risks to be shared. Europe has said for a long time, we can share them with you, but it seems as if Belgium is not happy with the text that has so far been provided. So you wonder what mindset all of the negotiators are going into this meeting with today in terms of trying to persuade Belgium and others to come on side.
Yeah, von der Leyen saying they must agree one of two options on Ukraine funding, because otherwise they're going to be relying on temporary options. So they really need to come to an agreement on that. There's also the trade conversation, right? So you have von der Leyen here saying that it's important they get the green light on the Mercosur deal. Ollie pointed out to us earlier that they've been working on this for 25 years. It really is a moment where Europe needs to send a signal to the US, to President Trump, that they can get a big trade deal done with another part of the world, that being South America, in the face of his tariffs.
Yes, and to go back to what Ollie was telling us at the start of the programme, a couple of big topics on the agenda, trade and Ukraine. And is Europe still a place that stands up for free trade? Is Europe still a place that stands up for its neighbour in Ukraine against Russian aggression? Both of those really big topics firmly on the agenda. In just a few moments, we'll be hearing from Kaja Kallas. She's been speaking already this morning and saying it is important to send a message that we are taking strong steps on Ukraine. And that is in keeping with what we've just heard from Friedrich Merz as well. He was saying, we have to take a big step here. We have to not let this war carry on any longer. So let's see what Kaja Kallas has to say further on this subject. Bloomberg's chief Europe correspondent is in Brussels. Ollie Crook, of course, as we mentioned, and he is joined by Kaja Kallas. Ollie.
That's right, Anna. Yeah, thank you so much. Yeah, Kaja Kallas, the High Representative from the European Union. Thank you so much for joining us this morning in what I think is one of the most consequential summits we've had here in Brussels in, I think, quite a few years. Two main issues are before European leaders. The first, the most urgent, financing for Ukraine. Will we get a deal on the Russian assets?
Well, I hope so, because we have to. Putin is banking on us to fail, and we can't give him that.
And so what gives you that sort of confidence in terms of getting there? Do you think that have you heard anything from the Belgians? Do you think that there is the sort of will there? We've heard Friedrich Merz in the last couple of days really throw his weight behind this. Is that going to be helpful?
Well, there are a lot of European leaders who are supporting this, and of course also addressing the concerns that Belgium has. I mean, over the last weeks and days, there have been a lot of negotiation. Hopefully we'll get there. President Costa has said that we are not leaving the meeting until we have a deal. How long the meeting will last, that is a question.
So I guess you'll be locking the doors. In terms of the agreement, we're hearing now from the Belgian Prime Minister speaking before Parliament. He appears to be doubling down on this idea that they're still very resistant to using the Russian assets. Is there a path that excludes Belgium that would touch those assets? Is that on the table?
Well, Belgium has the majority of the assets, so I think many member states have also said that they want to be confident that Belgium feels comfortable with the solution. But as I see it, Belgium is under a lot of pressure from Russia, from all of Europeans, comes also from United States. And in order to, release that pressure, we should do the European legislative proposal, because then it's Europe that is responsible, all of us responsible, and it takes the burden off Belgium.
But this is something I think I found very confusing from the very beginning. The Belgian sort of concerns about this seem very, very reasonable, and of course 27 member states, or let's say 25, backing up 140 billion euros doesn't seem impossible. It's hard for me to understand really the crux of what is at issue here, because this seems like a reasonable concern and something that the EU is really eminently able to resolve.
Absolutely. Yeah. And that's why I think, again, if we have the European proposal, then Belgium is just abiding the law. So anybody who has anything to say against can go to court against the European Union, which means that everybody, all the European countries are liable.
And I'd like to sort of frame this in a much larger context and how you see this, because I think it's very hard, no matter how you feel about the Russian assets, to hear every day for 4 years from European leaders how important it is to support Ukraine. And then the moment of leverage for the Europeans, really their last remaining point of leverage on the Russian assets, unable to get it over the line. What does that say about European power and about sort of cohesion within Europe if they're not able to get this over the line, just given the rhetoric we've heard for the last 4 years?
Well, it shows that we are 27 very strong democracies. I mean, and in democracies you have discussions and debates, and everybody comes with their domestic issues as well. But I think, also we have had some very difficult moments in the past, but eventually we all come together and come to the decision. Considering that Belgium's concerns also have been addressed recently, I really truly hope that we get this over the line.
And I'd like to talk also about the Ukrainian peace plan, the 20-point plan, in terms of what the European contributions are to that. What have you seen of the plan? Are you satisfied with its current state as it goes into those negotiations with Russia this weekend?
Well, there's a strong push for peace. That is very clear, and especially the Ukrainians really want to have peaceful Christmas. But it's a bit one-sided, because Russia hasn't agreed to any of the points. If we, saw yesterday also Putin making these maximalist claims that they are taking what they want, either militarily or around the negotiation table. I think this shows that they don't have any genuine interest to negotiate. So we need to go from the place where they are pretending to negotiate to actually pushing them into a place where they need to negotiate.
And talking also about one of the main sort of issues around that peace proposal, the so-called security guarantees. We now have the United States saying that they're backing Article 5-like guarantees. I've yet to find anyone who can really define what an Article 5-like guarantee is. What, in your understanding, is an Article 5-like guarantee?
Article 5-like guarantee is that, if you are attacked, then others will come to help you, those who have promised to come to help you. Like we have, in NATO, Article 5 says attack on one is attack on all. Of course, these security guarantees have to be really tangible, not on paper, but really how many troops somebody is contributing, what capabilities, how does it work in practice.
Are we approaching that, do you think?
Well, the talks are ongoing, and I really, really do hope that we get very, very concrete security guarantees, not just on paper that Ukraine has had before.
And we've heard Friedrich Merz actually in the last couple of days saying for the first time, I believe, that the Germans would be open to the idea of putting troops potentially in Ukraine. How important do you think that is, getting the backing of the Germans on that?
It is very important. Germany is the most important and biggest country in Europe, so definitely strong words from the leader of Germany are helpful.
And there were, of course, this national security strategy put out by the Trump administration just over a week ago. We now had a response from Ursula von der Leyen saying that this is Europe's independence moment. How do you translate that independence moment from a sort of line of rhetoric into the implications for what European policy should be vis-a-vis what is sort of unambiguously a much more hostile United States to the EU?
Well, we have already done a lot of steps when it comes to, boosting our own defense, boosting our own defense industry. I mean, working on those tracks, but also diversifying our trade portfolios, for example, not to have all the eggs in the one basket. And that's why we also have today the Mercosur discussions, which I also hope that we get over the line.
Well, yeah, that's where I wanted to go next on Mercosur. We heard, maybe trade is not your sort of primary concern, but your concern about the president's attitudes of Brazil towards the European Union will be one of your concerns. He says if we don't finalize this agreement now, Brazil will not pursue the trade deal during his presidency. So how important is it to get this deal signed by Saturday?
It is important that we move with this because, if we zoom out, the picture is such that we have huge problems with the economic coercive practices by China. So we need to diversify our trade portfolios so that we are not dependent on one single player when it comes to critical raw materials, when it comes to different aspects. And therefore, Mercosur agreement is really, really important because it makes the trade area of 700 million people, which gives a lot of opportunities for our companies.
It seems to me that there's a connection between Mercosur and the deal on Ukraine in the sense that this is one of the last opportunities for the Europeans to really take control of their destiny before the end of the year, which has been a very challenging year in terms of geopolitics, being stuck in the passenger seat, and really defining what Europe is about. Is this a continent that is about free trade with Mercosur? Is it about a continent that can back up its allies when they're being invaded and really make those difficult decisions? Do you see this meeting today in quite those terms?
Yes, definitely. It's a very important meeting in different terms, like you mentioned, also where we are able to deal with the problems that are happening on our continent and whether we are also able to boost our competitiveness and give opportunities for our companies, because that means prosperity. And if we have prosperity, we also have the economic strength that makes us geopolitical power. So yes, it's all very much interconnected.
And I want to get also your perspective on the U.S. desire to reestablish economic ties with Russia. How concerning you think that is from a European perspective? And does there need to be, in a sort of pragmatic worldview, a Europe that begins to think about the day after and what economic ties with Russia could look like?
Well, Russia is not a rule of law country, and we have seen, companies being nationalized. So I say good luck with that.
Okay, well, Kaja Kallas, High Representative for the European Union, thank you so much for taking the time speaking to us today and ahead of what is, I think, undoubtedly one of the most significant summits we've had here in Brussels in several years.
Ollie, thank you very much. Bloomberg's Oliver Crook there talking to Kaja Kallas of the European Union. Yes, a big task ahead of them then, Lizzy, today, dealing with the Ukraine situation, dealing with the trade conversation, and, yeah, certainly not in the mood to talk about restoring any kind of trade relationship with Russia just now. In fact, suggesting that they are not seriously negotiating. We need to bring them back to the negotiating table.
Yeah, kind of putting the pressure on Belgium, but saying, look, we know they need to be comfortable, but we need to get a deal over the line today.
And acknowledging that Belgium is under a lot of pressure from pretty much everybody, from Russia, from the United States, and from other European countries. We will be back with the market open shortly. European futures, given all the news flow, fairly subdued right now. They have turned a corner, a little bit more positive than they were. US futures pointing a little bit higher than the Asian session would certainly lead you to believe. The Micron news lifting Nasdaq futures, and so tech is certainly part of the narrative overnight. We will get to the market open here in Europe, though, shortly. This is Bloomberg. Welcome back to the program, everybody. A few minutes to go until the start of equity trading. The dynamics around US futures have pivoted more positive, talking about numbers out of Micron and a positive story around AI. So trying to turn a corner in terms of global risk appetite, it would seem, leaving yesterday behind us. But this was the picture for yesterday's session in the United States, and it was weighed down by concerns around valuation of tech stocks in particular. And we saw overnight the Asia session also weighed down by that. So that is certainly in our minds as we think about where we go on this European session. That said, though, as I mentioned, we've had a slightly more positive story around tech coming through in the last, since the markets closed in the United States. And this is the picture we have now for European futures. So FTSE futures up 0.1%. We're essentially not expected to move anywhere very quickly. And Lizzy, we have a number of things keeping us on pause, perhaps keeping us on the sidelines. We've got the Bank of England, the ECB, US inflation data also due out a little bit later on.
Well, as you talk about central banks, let's start with the banks then, because, of course, they will be minding what happens in London and Frankfurt from the ECB and the BOE. Keep an eye on the likes of HSBC, Deutsche Bank, Commerzbank, BNP Paribas, and on. But we also have to mind BP, which, of course, has made Meg O'Neill its first female big oil CEO in a bid to catch up with its rivals. Notable that this is really a sudden management shake-up for the company, so we'll keep an eye on that stock. But also Rheinmetall. The past few days we've been watching the defence stocks, given the situation in Ukraine being discussed in Brussels, but we know now that Rheinmetall is going to divest its remaining civil businesses, and it's also boosted its outlook for the year. So just a few stocks, Anna, to keep in focus at the open.
Absolutely. We will certainly keep those in focus. Yeah, really interesting story around Rheinmetall there. Also, drug stocks out of Switzerland in focus because of some of the news flow that we have around the United States and their businesses there. Let's get to the market open then. The FTSE 100 jumping into the green at the start of trade, waiting for the other European equity markets to follow suit. As Lizzy was saying, Bank of England, ECB, a lot of things to wait on the sidelines for perhaps today. These big set-piece events that the market still needs to get through for the year. We're not done there, though. We'll still have the BOJ tomorrow, but then after tomorrow, maybe then we get to take a breather for 2025. Dangerous thought, perhaps. So European equity markets just getting started. The Stoxx 600 looking pretty flat, pretty appropriate perhaps for this time of year, even if we are waiting for some big events. We're also keeping a close eye on all of the developments in Belgium, in Brussels, around the conversations around Russian assets and what can be done for Ukraine. And Belgium, of course, crucial and central to that conversation, as we were just hearing about from Kaja Kallas with Oliver there. So we'll certainly keep an eye on all of those conversations that are taking place in Belgium around the geopolitics. We'll watch oil prices. We'll watch the defence names with anything that is said there. European equity markets, I'm giving them some time to open, but they're not doing a whole lot, Lizzy. So maybe we'll come back to you and find out what the sectors are doing. Waiting for this SMI to open. Interesting in the context of some news flow surrounding those big drug makers there. But things looking faintly positive, I would say, across European equities.
Yeah, we've only got about just over half of sectors in positive territory this morning. Energy leading the gains, as you might have expected, given the oil moves up for a second day on Brent because of the geopolitical situation, both Venezuela and Russia. So Brent at $60 a barrel, up 0.7%, and energy up 0.9% as a sector. Outsized gains for BP as expected. Actually, now just really in line with the rest of the sector. So not really giving much of a boost, despite the naming of Meg O'Neill as the first big oil CEO. We're also, as I said, minding the defence names, and we're looking at Rheinmetall up 0.2%. But other names in that basket actually have bigger gains. So Leonardo up 0.4%, BAE Systems up 0.5%. So really not that much reaction to the news that I flagged. But just going back to the sectoral basket, the likes of travel and leisure, autos and parts, healthcare are your laggards this morning.
Yeah, there is a certain oil flavour to what's going on here. When you look at the top of the sectors board and it's energy, and the bottom of the sectors board and it's travel and leisure, you get a sense of one of the trades that is taking place there. And yesterday we saw this focus as well, this focus on higher energy prices as a result of some of the Venezuela news lines. In fact, we were higher on oil prices today, but some of the gains we made earlier being paired as President Trump didn't decide to double down on some of that geopolitics and talk about Ukraine or talk about Venezuela in his speech overnight when he addressed the nation. So that came as something of a comfort, perhaps, to those who had been expecting or fearing that oil prices may go a little bit higher. Let us talk about these markets a little bit more broadly. Banu Baweja joins us, Chief Strategist over at UBS, on set with us this Thursday morning. Banu, nice to have you with us. Thanks so much for joining us. So we are tantalisingly close to the end of 2025. We are not there yet, but let's pretend we're nearly there. And let's look at 2026. You actually think that 2026 might not be bad for equities and for risk appetite, but you think that in the very short term there might be a few bumps along the way. What are you watching?
We're going through those bumps, right? The market has consolidated for the better part of the last 2 months, and I think this consolidation will probably last for a little bit longer. What we're watching is the growth inflation mix, right? We are looking at the sort of the K-shaped economy in the US and the lower part of the K beginning to have its say. The labor markets are weakening. At the same time, we're going to get a CPI release today, which probably will show core inflation at 3.2%, slightly north of 3.2%, at a point when the Fed is already priced for 2 or 3 cuts from here. So the markets are already expecting the Fed to cut, and inflation is going to go higher at the same time as growth coming lower. And this is, I think, is going to put some pressure on equities in the very near term, right? And along with the fact that, as capex to sales have continued to increase for all the AI names, the market has become slightly less forgiving in terms of valuations, right? Oracle is not just the only problem. Yeah. The market's become slightly less forgiving for the worrying about IPOs coming next year, and that could be a problem for the tech trade. So all of these concerns near term, I think equities do consolidate. So we could be waking up in March with the S&P still at about 6,750 or 6,800. But once you start getting the checks in the mail, once you start getting the fiscal boost, the refunds, we think that probably is going to lead to the broadening trade.
So the fiscal side is important. You want sort of evidence of that. But what about evidence on the AI side? So we have this huge capital investment taking place right now. But yet the benefits of this are maybe a little bit delayed. The productivity bonus, the productivity boost we're going to get from this we're all waiting for, Banu. So what do you watch specifically to get an early sense of whether we've expected too much or too little?
This is very important. I think everybody understands that AI is going to impact every company at some point in the future. But which companies will be impacted first, right? Surely these are companies that have a lot of data that they can harness and perhaps a lot of labor that they can replace. So what kind of companies have a lot of data and a lot of labor? These are asset managers, insurance companies, retail companies, commercial and professional services. So this is what we're going to be watching. We're going to be watching financials, and we're going to be watching retail. We're going to be watching commercial and professional services. These industries, we're going to be looking at sort of at a bottom-up level where the sales per employee in these companies are rising. Because I think these will be the vanguards, right? This will be sort of the leading indicators of tech love moving from the producers of AI to the consumers of AI.
Okay.
And we're hoping that this comes through the course of 2026. That's going to be a necessary condition for this trade to carry
Okay, so that's sales per employee, watching what the banks do with this, watching what financial services do. One concern some people raise, though, about that particular sector is that, yes, they have a lot of data, but they have to be extremely careful with that data, and some of it is on quite legacy systems. Certainly some of the older banks, maybe on many legacy systems, and that kind of data is not necessarily in a format where you can do a lot with it with AI. But are we going to get through that?
I think the market will look through that. I think what we will need to see is that these companies are investing. So the CapEx is not just with NVIDIA or with Micron, that the broader universe is engaging in CapEx, which actually is not happening right now. So if you look at CapEx in the US, it's very narrow. In fact, narrow is the metaphor for the U.S. economy, for U.S. markets. Everything is in a tiny sliver. I think you need to see CapEx from companies that are the consumers of AI to start using the productivity of AI. I think the market will look through the fact that they are legacy systems.
But then when you look at it from a macro perspective, does it come with job losses?
The labour market is already under strain, and we think the unemployment rate could go higher still. So we're already at 4.5, 4.6. There's a possibility we get to 4.8%. The question of whether or not the consumer comes back in a big way through the course of next year is a really important one. So we think the consumer is going to weaken before it strengthens, because we think real disposable income is already weak. The number of people that are getting employed is lesser and lesser. I mean, outside of education, outside of government, you actually have seen sort of negative payrolls, including healthcare. And so once you see real disposable incomes bottoming out, and that's going to happen with CPI peaking out, which is going to be somewhere around Q2, that's when I think the consumer can start doing better. But here and now, we are actually quite cautious on the consumer. The market disagrees. The market is already playing the broadening trade in financials, in the consumer. We think it's a little bit early, so that's why in the near term we're more cautious. Whereas from Q2 onwards, I think the fiscal side is going to help the consumer as well.
OK, let us not forget that it is a big day for central banks today, not just the BOE and the ECB, but others as well. If we look at the BOE, Banu, we had that CPI print yesterday, weaker than expected. Did it change the vote split that you're expecting, and more importantly, I suppose, your outlook for cuts next year?
We were actually thinking that inflation is going to come lower. I mean, if you look at what's happened with inflation in the UK, it was annualizing at about 4.7% in the first half of the year. It's annualizing close to 1%, right? Inflation's come off really hard. And this is not just food. This is also core inflation elsewhere. It's services as well. And the labour market outlook is such that you should expect low inflation to continue. So the vote split, 9-0, I think.
And 9-0, it should be already. Wow.
I think it will be. I think that today you could actually see everyone looking for a rate cut in December. But also, I think beyond that, you could see 2 further rate cuts.
OK, let's just test this, Banu. I mean, we've got inflation above target. Yeah. The PMIs actually didn't look that bad, even if some of the GDP data has looked pretty dire. The wages story isn't necessarily telling us a crumbling wages story, even if unemployment is higher than you'd want it to be. And we have had hawkish comments not all that long ago from some on the Bank of England. So do you really expect 9-0?
What on earth happens to the pound, Banu, if you have a 9-0 split?
But you're going to get a 25 basis points either way, right? So 8-1, 9-0, I don't think it's going to make a material difference, but I think with that kind of a CPI report, you could get a 9-0 vote, and I think euro sterling therefore goes higher. the ECB is not going to hike, but the outlook for growth in Europe is improving at the same time as the outlook for growth in the UK is mixed. It's not dire, but it's mixed. And I think the outlook for inflation in the UK, the delta, the change, is much more important here than the level, and the delta is way more negative. Again, it's annualizing at a very low level, and from here on, I think the inflation rate is going to remain quite low. So we're looking for 2 more cuts next year as well.
Okay, well, I'm very excited that Banu's here, because this just got a whole lot more exciting.
I just had to pick my jaw off the floor.
So that's that one. I mean, that's interesting, what we're expecting there, what you're expecting there. I know there are other things you're watching in 2026, Banu, that I do find really interesting as clues as to where the economy goes. So private credit delinquencies, we've seen this be a topic this year, it was a big topic, but it sort of faded away. Is 2026 going to be a year where private credit delinquencies are an issue? But rates are coming down in the States, so maybe not.
Well, rates are coming down in the front end. What's really interesting is rates are not coming down in the back end. And this is something that I think equity investors and credit investors really have to grapple with, because we keep focused on the Fed, right? And you say, oh, look, the Fed is cutting and therefore we must buy risk assets, we must buy low-grade credit, and we must buy equities. But in fact, the long-end yields are not coming lower. The market is asking for higher term premium. The market is steepening the curve. So the long end is not coming lower. I actually think this is almost the exact opposite of what happened 20 years back with Alan Greenspan. You remember the years of the conundrum when Greenspan was hiking rates and nothing happened to the long end. Now, fast forward 20 years, the Fed might be cutting rates, and again, nothing happens to the long end because the supply and demand for treasuries has completely changed. The supply is going exponential, and people are not buying that. So I don't think the cost of equity is coming lower. So I do think that you will see higher private credit delinquencies, and that will put pressure on publicly traded credit, so high yield spreads, to move wider. And that does have implications for valuations in equities. We think valuations are going to contribute negatively next year. And so it's all earnings.
We've talked about this on the programme a few times, Lizzy, about the fact that the long end has not been responding as much as it maybe has in other cycles to those cuts from the Fed. And you wonder how that sits alongside the priority that President Trump has made of bringing CPI down. And part of that is mortgages and car loans, and some of that tied to longer dated treasuries and longer dated markets. So this all comes together, and you wonder where the politics takes that.
Yeah, I mean, we've had all this data this week, but I do wonder how important it actually is, Barney, when, it's patchy, it's imperfect, not to mention it's delayed. And then you talk about the politics, Anna. There's politics around the Fed itself. I mean, I wonder who's most credible to the markets, and I wonder if actually the contest to be the Fed chair matters more than any of the data we'll get till January. I
think that's a fair point, but if you cut through the noise, Lizzy, right, the markets are not concerned about Fed independence, right? The markets are not, right? There's a lot of narrative around that, but the one indicator that we must watch to see if the markets really care is the 5-year inflation swap. The 5-year inflation swap in the US is coming lower, not higher, and it's actually at a level which is below a long-term average. If the market was genuinely... Look, the Fed is already a dovish institution. You don't need to take away independence from the Fed for the Fed to be a dovish institution. If the Fed had the same data as we've had in Europe for as long, ECB rates would be much lower. So the DNA of that institution is already quite dovish. They do care about long-term funding. They do care about interest rates in the economy. I think January 21st is going to be a really, really important day, right? So what happens with Lisa Cook from the Supreme Court, I think that's going to be really, really important. But if the Supreme Court at that time says that she can continue as a Fed governor, and you can't willy-nilly replace Fed governors, I think the market's fears about Fed independence would be allayed. Now, who comes in next? I think a dovish chair comes in next, right? And a dovish chair could be very, in a sense, Greenspan-esque again, in that they talk about productivity, they talk about the supply side, and therefore try and rally consensus to cut rates. But the market is pricing that in. So I'm not sure that based on what's happening with the Fed chair, that you really want to receive front-end rates in the US right now. I don't think, because I think you are already pricing that.
Okay, so we know there'll be a dove, and we have a 66% chance they'll be called Kevin, is what we know about the new Fed chair. Banu, thank you very much. Thanks very much for joining us. Banu Buwaja, Chief Strategist over at UBS. Things we do and don't know about 2026. Let's talk about the Core 6 this morning, in the midst of not much earnings news, bit of tech news, certainly a lot of geopolitics. Let's have a look at where we are on the Core 6. Not a huge amount of movement in some of these big names. Nestlé, actually, actually the biggest mover to the upside, which tells you something perhaps about the market's wait-and-see mentality this morning as we wait for those central bank decisions. Let's get a check on some individual stocks on the move. Here's Chloe.
Good morning, Anna. BP is actually edging a little bit lower this morning. It opened higher this morning at the open, but is now a little bit lower after naming its first female CEO and the first female CEO of a big oil company. So she is now tasked with reviving the fortunes of BP that has been really lagging behind its rivals. And some analysts had said that this appointment would be actually received quite well by the market because of her track record at Woodside, where she had made some aggressive moves and had a strong record of execution. But it seems that this original enthusiasm that we had at the open has been now pared back a little bit on the back of this appointment, and we are down about 0.7% this morning for BP. Moving on to Arjanx, which is a biotech company that's also a little bit lower this morning, about 2.3%, and that is because the ADRs were downgraded by analysts at Baird, saying that the valuation was actually quite stretched for Arjanx, despite what has been a really amazing growth story over the last year for the company. And this comes just a few days after the company also had to discontinue a big trial for its flagship drug, and that had already sent the shares lower. So back-to-back setbacks for Arjanx, and it's down this morning. Moving on to Rentokil, which is a pest control company, and it was upgraded at Bank of America this morning, and so we are up 3.3% on the back of the upgrade. And we have got another upgrade as well, this time from UBS, and that is for Rational, a company that makes kitchen appliances for hotels and restaurants, and that is also driving those shares this morning. And we are up also about 3.5% for Rational this morning.
Right, Chloe Melly from our equities team, we thank you so much. And coming up, we're going to dive into the BP story. The company appointing its first outsider, Meg O'Neill, to lead the oil and gas giant. More on the management shake-up and where it leaves BP's oil and gas strategy next. This is Bloomberg. Welcome back to the opening trade. We're 19 minutes into today's session, and not a lot is happening here in European equities. You can see the Stoxx 600 there, flat to the upside. Same story for the DAX in Frankfurt. Bit more gains in Paris off the CAC, but the FTSE 100 pretty much unchanged at the moment. One stock that is moving a lot this morning is Currys. It's up more than 10% at the moment after the retailer reported profit for the first half of the year that beat the average analyst estimate. And joining us to talk more about that and the broader retail picture is our Bloomberg opinion columnist, Andrea Felstead. Good to see you, Andrea. I think you were excited about Currys before their numbers dropped. Why so? Why is it moving so much?
I think it's just a better performance, particularly on the Nordic regions. I'm always interested in Currys because it gives us a bit of a read from Black Friday through to the run-up to Christmas. They actually said in the statement that the UK consumer was subdued, which is definitely what I've been hearing. People took a bit of fright in the run-up to the budget. Maybe for consumers it wasn't quite as bad as feared, but I fear that came a bit late. We saw a lot of discounting in the UK over Black Friday. A few people have moved back to full price. Still quite a lot of discounting out there. Lots of clothing, fashion's already been discounted. Lots of beauty offers, fragrance offers. So Christmas always turns out to be better than you expect. But I'm not expecting a turkey and I'm not expecting a cracker, probably somewhere in the middle.
OK, you'll find a new metaphor for that one then.
Yeah.
So that's the retail story here in the UK. Let's talk about fancy, expensive yoga pants, shall we?
Exactly.
Andrea, because Lululemon is in focus. Investors, Elliott, have revealed that they have taken a big stake in the sportswear maker. What do we know?
Very little. They're working with a retail executive called Jane Nielsen, who seems to be a CEO candidate. They got rid of their CEO last week. Now, she seems to have some quite good credentials. She was at Ralph Lauren, which has done a very good turnaround.
They're having a moment.
They are having a moment. She was finance director there. She was COO. So she's definitely got the financial and the operational skills. What I think that is a bit of what Lululemon needs, but what it really needs is someone who's good on product, someone who can create those leggings that people want to spend $100 on. And I'm not sure she's the product person. So at Ralph Lauren, obviously, you have very good operations, but you have Ralph Lauren himself very visibly, very visible look, still active on the creative side. So she was able, and the CEO, Patrice Levay, were able to do a very good operational turnaround. But you had, Ralph kind of helming the look and the feel of the brand. You don't have that missing piece at Lulu.
I came in my Ralph Lauren bear jumper this morning, Andrea, but Anna says I'm not allowed to wear it round the desk. Maybe on Christmas Eve. Watch out.
That makes it sound like I'm in charge, which is really not the case.
Look, we also got to talk about Nike because they've got numbers coming later. What are you expecting?
I'm expecting maybe a bit of improvement, particularly on the inventory side. They were getting rid of a lot of those kind of out-of-fashion sneakers. They've already said they're making progress on that. What we really need to see is whether the broader turnaround is happening. He's been there just over a year. October 24 takes probably 18 months, 2 years for all the product to come through. We need to see that's on its way.
Andrea, thank you very much. Andrea Felsted from Bloomberg Opinion, of course, with all you need to know about retail and luxury. Some of the news behind us and some of it still to come. Let's pivot from that to the oil major BP, oil and gas major, and we will check in on the share price. The share price down just a touch this morning, down 0.1%. BP, the news overnight is that BP has selected the Woodside Energy CEO Meg O'Neill to lead the London-headquartered global oil and gas giant. The move makes her Big Oil's first female chief executive and comes as the British firm struggles to revive its fortunes after what could be described as a botched pivot to renewables under previous management. Let's speak now to Bloomberg's big oil reporter Mitchell Gurman, who's with us here on set. Very nice to have you with us, Mitchell. So shareholders were expecting an announcement, weren't they? We'd heard from the current CEO that he might be prepared to step aside if that was something that was necessary. So what do we know about Meg O'Neill, who's been selected?
Yeah, well, first on the shareholders, we just heard about Elliott, building a stake in Lululemon, and one of Elliott's biggest bets globally is BP.
They have diverse tastes.
Yeah. and the only public remarks they've made on BP since entering is welcoming the new chairman when his appointment was announced over the summer, basically saying he needs to urgently fix the company. And when he took over in October, that's what he told staff on his first day. The strategic direction was correct, but they need to move faster and with more urgency. He's a couple months into the job, and he's moved fast with the change. And this, Meg O'Neill, she's an American. She is from Colorado. She worked at ExxonMobil for 2 decades, spanning the globe, and then she took over Woodside, Australia's biggest producer, and she shed low carbon projects. She doubled oil and gas output, and she really focused the company on a global liquefied natural gas portfolio.
So given that experience, what do you expect now under O'Neill to happen at BP?
Yeah, BP earlier this year reversed its strategy from low carbon ventures back to focusing on oil and gas. The expectation is they will focus on oil and gas. She did that in her last job, and the chairman had said that the strategic direction of oil and gas focus was correct, so we can expect more focus on that.
Murray Auchincloss not in the post for very long. I mean, was he too tainted, if that's the right word, too unable to draw a line between the previous management under Bernard Looney and his tenure, given that he'd been such a part of Looney's team?
Yeah, no, he was definitely part of the previous tenure, and he kind of struggled to break from that in some ways, and he did make the strategic reset, but that reset came after Elliott called for major change. So even if he was prepared to make that, it looks like Elliott, had some influence. And then the announcement of the new strategy received a lukewarm reaction from investors at the time, and really struggled to make any major moves.
OK, really good to get your analysis. Mitchell Furman there on the BP story. The shares are now down 0.25%, but other names in the energy space actually up. The likes of Shell up 0.5%, Total up 0.7%, as we look at Brent up for a second day at $60 a barrel. Coming up on the programme, EU leaders expected to try and agree on the release of frozen Russian assets to assist Ukraine today. We're going to bring you the latest on the Ukraine war and path to peace with Fabrice Poitier, CEO at Rasmussen Global. That conversation next. This is Bloomberg.
Welcome back. This is the opening trade this Thursday morning. We're 30 minutes into our European session and things are green, but not all that convincingly so. We've just been flicking between red and green on the DAX, for example. We're almost entirely flat on the Xetra DAX, almost entirely flat on the FTSE 100 as well. The CAC 40 is up by 0.1% and the Stocks Europe up by 0.1%. We are waiting for some big central bank decisions coming through from the ECB and the Bank of England today. In the meantime, we've had some news out of Sweden's Riksbank. They have left their policy rate unchanged at 1.75%. The estimate was for 1.75%. So that's pretty steady as she goes. We are expecting new estimates, though, coming through from the Riksbank. So there could be some volatility around those. What do they tell us about expectations for growth and inflation from the Swedish central bank? Last time we heard from the governor, he was sounding as if the bar for any change in policy was pretty high. So we will keep in focus the exchange rate for the euro against the Swedish krona to see if we get any movement on the back of those estimates as they come in. But not a huge amount of movement right now, Lizzy.
Well, reflecting the green on the screen that you showed us, Anna, when it came to the European equities picture, we have more members higher than lower on the Stock 600 this morning. Not that big of a split, but lower volumes notably as we head towards the holiday period. But flip over and you can see who the leaders are this morning. We've talked about how the oil prices look higher for a second straight day. And indeed, we have Total Energies up 0.7%. A different story, mind you, to BP, as we were just discussing. That stock actually not getting as much of a boost as perhaps expected when it's now got its new CEO. But you're also seeing ASML up 0.7%. This linked to the overnight story. We had the encouragement from Micron overnight, so changing the fortunes perhaps for US stocks today after the disappointment yesterday on Oracle and Blue Owl. But flip the board and we can look at the laggards as well. And I believe they're going to take a healthcare flavour. So Roche, Novartis and GSK all suffering this morning, Anna.
Yes, you mentioned the tech story around Micron, Lizzy. Let's get a bit more detail on that and other news that we have in focus this morning. Micron shares rallied in late trading after the largest US maker of computer memory chips gave an upbeat forecast for this current quarter. The company's CEO said in a statement that Micron is, quote, an essential AI enabler. The PC chip maker is benefiting from the AI boom and a surge in demand for its products, with supply shortages allowing the company to charge higher prices. The US President Donald Trump looked to reassure Americans concerned about the cost of living in a primetime address to the nation last night. President Trump announced plans to award a special holiday payment to military service members and told voters they would see the benefits of his tax cut legislation next year. Investors look ahead to more information on prices in the United States. The US CPI print is due today at 1:30 p.m. UK time. Both the Bank of England and the European Central Bank have rate decisions today. The BOE is expected to deliver a pre-Christmas interest rate cut later today as focus shifts from inflation towards the UK's struggling economy and jobs market. Then the ECB is widely expected to hold its rates steady, with investors looking to President Christine Lagarde's press conference 30 minutes later for some guidance. Lizzy.
Plenty in the diary then on the central banking front. But in the meantime, we have EU leaders meeting in Brussels to discuss whether to loan billions of euros to Ukraine funded by frozen Russian assets. Now, Belgium has been opposed to the plan, and a short while ago, the EU Commissioner for Foreign Affairs, Kaja Kallas, told us that she was aware that the Belgian government was coming under pressure from all sides.
As I see it, Belgium is under a lot of pressure from Russia, from all of Europeans, also from United States. And in order to, release that pressure, we should do the European legislative proposal.
Well, that conversation brought to us by Bloomberg's Chief Europe correspondent, Oliver Crook, who joins us now. Ollie, just lay out the scene for where the talks stand in terms of the European position.
Yeah, absolutely, Lizzy. The scene here as we watch European leaders, literally as we speak right now, file into the European Council chamber. They have yet to decide whether or not they're going to move forward with this plan to use those frozen Russian assets to lend Ukraine 90 billion euros to fund their war effort, to fund their economy, to two-thirds of the entirety of the needs of Ukraine over the next 2 years. Whether or not they're going to move on it is still, frankly, a completely open question. It's rare that you go into these summits with something quite as important, quite as consequential, and also without any certainty uncertainty of whether they're going to agree to it or not. We've heard from the Belgian Prime Minister a little bit earlier today, speaking in his own parliament. Of course, one of the other pressures of some of the domestic audiences within Belgium, doubling down on this idea that he has not yet received the assurances he requires from the European Union in order to say okay to move forward on these assets. We also heard from the Chancellor of Germany walking into the meeting just a few minutes ago, and I'll quote directly. He says that, in my view, this is the only option, that is seizing the assets. Ultimately, we are faced with the choice to use European debt or Russian assets for Ukraine, and my opinion is clear. We must use the Russian assets. What he is basically alluding to is that there is not a plan B for funding Ukraine. So this is a question not just about funding Ukraine, but about European credibility. Can they get their act together? Can they clear these sort of hurdles in order to act collectively in the face of what Russia's war in Ukraine?
Yes, well, if others might suggest that shared debt might be a plan B, Ollie, then perhaps we might preempt the German response to that. So there's Friedrich Merz, the German Chancellor, throwing his weight behind the use of frozen Russian assets. So this is a difficult conversation for Europe. Everything around Ukraine then on the table, but also the trade narrative, also a difficult conversation.
Yeah, that's right, Anna. Going on in the background, this is not officially what these leaders are here to discuss, is the Mercosur trade deal. This is a trade deal that has been negotiated for the last 25 years between Latin America and the European Union. The aim here would be to bring a free trade agreement to a market of about 800 million people. For the Europeans, and from their perspective, it's extremely important because obviously the economy has been struggling for some time in Europe, but it also gives another sort of avenue of trade for the Europeans in the face of an America that does not seem terribly interested in trading with the Europeans. This is seen as a very key way to diversify the economy. This was all set to go to be signed on Saturday, and starting last week, we started to get some doubts from the French, from the Italians, and some doubts indeed from the farmers. We're on my way over here. You can just see outside of the council building, just down the road, there's black smoke rising, there are tractors, there's massive protests going on in the face of this Mercosur signing deal. So it's not clear whether or not this key issue is going to get on the line. And I'll quote Friedrich Merz just one more time here, because he's been a lot more sort of outspoken in recent days, both on Russian assets and on Mercosur. He says that if the EU wants to remain credible in the global trade policy, decisions must be made now. We heard from the president of Brazil. The French want to delay the signing. Brazil says basically, we sign this weekend or we don't sign at all during my presidency. These are the stakes for the Europeans as they gather today here at the council building in Belgium.
OK, Bloomberg's Oliver Crook, we thank you so much for setting up. You've got a busy day ahead of you, so thank you. Well, for more on the UK-Russia conflict and Europe's role in a possible peace plan, we're joined, I'm pleased to say, by Fabrice Potier, CEO of Rasmussen Global and former NATO Policy Planning Director. Welcome to the programme, Fabrice. Thank you for making time. Ollie was speaking to Kaja Kallas earlier on in the programme, and he asked her what Article 5-like security guarantees actually are. She said, if you're attacked, others will come to help you. I wonder, surely Putin doesn't care about semantics. Is he surely going to treat Article 5-like security guarantees as tantamount to NATO membership?
I think Vladimir Putin does care about semantics, because if you look at the past 10, 15 years, he has towed the line of actually respecting Article 5. He likes to probe, he likes to test, but he never crossed the line. So I think it does matter, but obviously, as you know, some allies and some members of the European Union are more equal than others. And security guarantees without the United States support, be it, for not necessarily front role, but at least a backstop role, is critical to make those guarantees credible. So I think this is really where the negotiations between Kiev, Europe, and the United States lie. And we have to see what will emerge in the coming days and weeks.
And so how close are we to getting a deal on the table, Fabrice? Because we've also had the news of the US planning to step up its sanctions on Russia.
Well, the problem is you have a U.S. administration that is clearly zigzagging on its Ukraine policy. 1 month they are very pro-Zelensky and willing to put pressure on Vladimir Putin, and then the next month President Trump and some of his acolytes are actually embracing Putin and his ideology. So this is obviously very confusing and very frustrating for both Ukraine and the Europeans. But clearly, the discussion over the past few days have circled around the willingness of Ukraine to make some difficult compromise, provided they are given the security guarantees that this will not happen again. We have to remember, this is the second attack, invasion by Vladimir Putin against Ukraine over the past 10 years. So I think it is quite legitimate that any Ukrainian leader, being Zelensky or any other one, will say, listen, if I am to make some hard compromise for peace, I need a guarantee that this is not going to happen again, and I won't have to tell my people they have to again sacrifice themselves. So we will have to see how Trump is taking this on board, and whether he's willing to put a bit of skin in the game.
How far? Good morning to you, Fabrice. How far off or close at hand is a peace deal, do you think?
It's very hard to say because, as you know, there is a lot of information operation from all players here on, posture that are declared, but in fact you have slightly different positions behind closed doors. It's hard to say. I think the very bottom line here lies with two men, Donald Trump and Vladimir Putin. And if you look at Putin, clearly he doesn't see the need to go for compromise. He still sees that there are more benefits than costs in pursuing this war through military means rather than diplomatic negotiations. Why? Because the second man, Donald Trump, has not been willing to put additional costs on Vladimir Putin's action. And as long as this happens, I think Putin is still going to be willing to go with the war and military means rather than to sit at the negotiation table.
And with that in mind, Fabrice, what role do you think this conversation around using frozen Russian assets, what role does it play? Because the United States has been saying that if Europe makes this decision, then it really complicates this peace conversation. Is that just playing into the Kremlin's playbook, or do they have a point?
I think it's playing into the Kremlin-Vitkov playbook of seeing, business opportunities and wanting to potentially unfreeze some of these assets and commit them to some kind of joint investment. But putting this aside, I think this, whether European leaders can come to an agreement on leveraging the immobilized assets is actually very critical. You were talking about security guarantees at the beginning. I think security guarantees and this are the two key to actually Ukraine, an independent sovereign Ukraine, surviving. Why? Because basically it will give the fiscal depth for the next years that Kiev needs to actually get through this war. And it will send a signal to Moscow that actually Kiev has what it takes to be resilient fiscally, which is obviously crucial. Remember, this is an industrial war. This is not just a kinetic war. This is about how much you can produce, how much of your economy you can keep together. So this decision today and tomorrow in Brussels will be critical for Ukraine's future.
But what about the role of President Zelensky, Fabrice, in agreeing to a deal? He said this morning that he's not ready to withdraw troops from Donbass. He said that the US offer on Zaporizhzhia as a compromise is not fair. Has he got some part to play in holding back a deal?
I think the very bottom line is that President Zelensky, obviously, making any form of territorial compromise is extremely difficult for any Ukrainian leader and for the Ukrainian population at large. And he can only do so if he feels that he has the guarantees that, okay, we have accepted some temporary realities, let's put it like this, but we did so in exchange for knowing that the unoccupied parts of Ukraine are safe, they are guaranteed, they have a long future. And I think it's his way to keep on exerting pressure on the Europeans, but essentially on the United States, to be more forthcoming when it comes to security guarantees, which is something being negotiated right now.
Fabrice, how quickly do you think the thinking in lots of European capitals is evolving on what they are prepared to do to secure peace for Ukraine? I was interested yesterday to hear Chancellor Friedrich Merz in Germany talking about how German troops could participate in a coalition to secure a demilitarized zone in Ukraine. Is this something we're going to have to see from a lot of other leaders?
I think we have to put this into the broader context. Having a German leader saying this now today is almost historic, given Germany's history vis-à-vis Ukraine and reluctance to be put in a position of possible direct confrontation with Russia. So this, I think, tells you a lot about how the Europeans realize this is theirs, and they have to really put the skin in the game, and they have to actually solve it. Of course, they need the United States because the US brings some capabilities, some what we call enablers, satellites, intel, some missile technologies that the Europeans don't have at scale. But essentially, this is going to be on between the Ukrainians and the Europeans. So I think Chancellor Merz saying that is very important signal of the willingness for the Europeans to go further. The coalition of the willing is obviously shows that there is this will, at least among a dozen European leaders and countries. However, I think we should be willing not just to wait for a ceasefire, but probably do some pre-deployment in the air, in the maritime domain, where there's less risk of confrontation, and there's a way to signal to Russia that this is game over.
Tremendous pressure on Brussels today. Fabrice, thank you so much for your analysis. Fabrice Potier, Rasmussen Global CEO and former NATO Director of Policy Planning, as we look ahead to that meeting. Well, coming up, central banks are in focus as well, of course. The Bank of England and the European Central Bank set to announce rate decisions later today. We'll take a look at what to expect next. This is Bloomberg.
Welcome back to the opening trade. We are 49 minutes into that opening trade for this Thursday, the 18th of December, and the picture across European equity markets looks tentatively positive across European stocks. We're waiting for some big set-piece events today. Let's get into those. We've got an EU Leaders Summit taking place. We've had some contributions from that already this morning. The Bank of England rate decision, the ECB rate decision. We will talk about those more now, and US CPI. We'll also discuss that because that also lies in our future today, this Thursday, Lizzy.
Well, let's start across the road, shall we? The Bank of England expected to deliver a pre-Christmas rate cut today as focus shifts from inflation towards the UK's struggling economy and jobs market. Joining us now is Dan Hansen, our chief UK economist for Bloomberg Economics. And Dan, you wouldn't believe what Banu Baweja just told us, the UBS chief strategist. He's expecting a 9-0 vote split in favour of a cut.
It could be. It could be. Yeah.
Could it?
That shocked me slightly. I mean, look, it's not our base case, and it's not the market's base case. I think there is definitely now, following the CPI yesterday, a risk that more of the hawks flip. Well, I think the ones that we'd be watching, if we were, and thinking this might mean February's on for a cut as well, would be Claire Lombardelli and Hugh Pill as well. And I think particularly Claire Lombardelli would be the one to watch. And I think the two that are most likely are potentially Megan Green and Claire are the two most likely to flip. It's possible Catherine Mann does as well, because we know she likes to be activist. I think Hugh Pill's probably the least likely to flip. But anyone, any of those, particularly Claire, as I say, would be a significant signal.
That would be a bit of a signal for the markets about what the beginning of next year might bring. And what does the economy look like to you as we turn the corner into 2026 then, Dan? Because on the one hand, sure, the GDP data has been pretty bad. But we've got this PMI data just recently that looked a little bit more hopeful. Yep. And the labour market story, although deteriorating, it's not all worrying signs. So what do you focus on?
So I think the fourth quarter is going to be a pretty bad quarter for the economy. I think you're probably going to get no growth, perhaps even a contraction in the economy.
Do you think they'll change their forecast on that?
Yes. So the bank in November had 0.3 for the fourth quarter. That just isn't going to happen. But what I do think you could get, and I think is quite likely actually, is a bounce back in the first quarter. We've had that in the past 2 years, remember, and there's a bit of a question about the seasonality of the ONS data. We tend to get quite a big jump in 1Q, and there are also some temporary factors that will help that. So we've got the doctor strikes at the moment that will obviously weigh on GDP in December, but lifted in January. You've got the stuff around car production as well. And also you had the uncertainty around the budget. And the PMI, going to your question, Anna, gives some sense of, or effectively the economy has done a lot better coming out of this budget than
Yes.
it did coming out of the budget in 2024 when the PMI nosedived. So I think
that is important.
That is important. All of that said, I think it's definitely the case that the risks for the economy next year are to the downside, not to the upside.
All right, thank you. Thanks to Dan Hansen, Chief UK Economist for Bloomberg Economics, regular contributor to this programme, of course, and we'll be diving into the Bank of England, of course, in future hours of programming on this channel. Let us go, though, from the Bank of England to the ECB. Traders are betting the ECB is done with interest rate cuts, but recent hawkish noises have spurred markets into pricing the next hiking cycle, just starting to, in a far-off kind of way. Alex Weber, Bloomberg's ECB and European economy reporter, joins us. Alex, so a hold is widely expected. We're also going to get some new forecasts today. So what should investors be looking out for?
Yeah, indeed, as you said, the actual decision is not going to be the most interesting thing about today's event. But the forecasts that you just mentioned, they are going to be quite interesting because we expect them to show an undershoot of inflation for the next 2 years, actually. And investors will be looking closely at just how deep and how long this undershoot is going to last. And it will be up to the president, Christine Lagarde, to explain why the ECB doesn't need to cut despite such an undershoot. She will likely argue that it's quite small and that inflation is going to be back to 2% at the end of the horizon. But that is certainly one thing to watch. The other thing is the recent market moves. As you just said, markets have started to bet on a hike. One economist explained to us that this sort of repricing is actually equivalent already to one hike. And the question for the ECB is whether this is what the economy really needs at the moment, given this inflation undershoot of the next 2 years. So it'll be really interesting to hear what Lagarde has to say about this, whether she wants to pour a bit of cold water on these kind of bets or whether she kind of endorses them, even implicitly. So that would be very exciting. Another thing that could come up in the press conference is actually Lagarde's succession. In a recent interview with us, Executive Board member Isabel Schnabel threw her hat in the ring, even though Lagarde's still in the job for another 2 years. But this is a topic that could come up in the press conference.
Not backward about coming forward, is she, Isabel Schnabel? Alex, thank you so much. Happy ECB Day. Alex Weber, Bloomberg's ECB and European economy reporter in Frankfurt. Well, shortly after the breaking of the ECB decision, we're also going to get a double release of US CPI. That's at 1:30 p.m. UK time, and we can get a preview now with Valerie Teitel. She's back. Val, I wonder how much confidence this print could give us that actually the peak of inflation is past or passing soon.
Yeah, well, our own economist here at Bloomberg, Anna Wong, does think there will be hints that goods inflation is peaking in this report today. It might be something that could give some confidence to the equity market, which has seen so many wobbles this month of December. However, the big risk out there is that this print could be just as noisy as the non-farm payroll print was 2 days ago. It is a double print, so we are going to get some components from October. Some will be interpolated. We'll get all the data for November. But even Powell himself said at the press conference last week that a lot of this data has a lot of distortion in it. So the market might shrug off the data it doesn't want to think about, essentially. And that would be an upside reading on core goods that might show us some hints that maybe tariff-induced inflation should still be one of our main concerns next year.
Okay, well, that's interesting in the context of Christopher Waller, who seems to be focused on the dovish side.
Yeah, exactly. We heard from Chris Waller, another candidate tipped for the Fed chair. He said yesterday that he is quite confident that inflation won't reaccelerate this year, and that's why he is in the camp that the Fed should continue cutting into next year to protect the labor market. But again, a theme like this could really be disrupted by what we see today if perhaps we do see an unexpected rise in core goods, leading us to perhaps worry that maybe tariff-induced inflation still has more to come in the next few months.
Okay, Valerie, thank you very much. Valerie Teitel joining us there with the latest on some of the things we're looking ahead to in the US trading day. Also in the US session ahead, Nasdaq futures are up by 0.7%. The Micron story, it seems, turning a corner from yesterday. We were all worried about AI valuations, and that sent stocks lower in the United States. Well, today looks a little bit different. US futures pointing a little bit higher. European stocks are pretty flat as we wait for the ECB and the Bank of England. The Pulse is next. This is Bloomberg.